Hello everyone and welcome to the Monday Open hosted by the Vantage private client team. My name is Ollie and joining me today we've got Steve. How you going, Steve?
Hey Ollie, I'm good. Yourself? Especially seeing the return of the Mighty Ducks behind you.
Hey, honestly, it's the best Secret Santa present I've ever got. No, we love it. Okay, so let's move into the agenda for the video ahead. So for any of our returning viewers, this will all look very familiar, but for any of our new faces here, this is how we normally run it. So starting off, we'll take a look at the big events from last week and see how this moved prices. We'll then move into the week ahead section where we'll put a spotlight on some of the major events for the week ahead, see how this fits in with our key themes from the week prior, and give our take on where we think the prices will go. We'll then move into the technical corner where we'll be putting a spotlight on a couple of key different markets and analysing them using our technical indicators. And lastly, we'll move into the Q&A section where Steve and I will answer some of your guys' most commonly asked questions from last week. So starting off the last week section, on your screen, you will see your guys' top traded products from last week. Easiest one that stands out for me is silver, obviously hitting all-time highs after starting off the week very strongly. But how about you, Steve? Anything to note in there?
Yeah, just the return of USD JPY. So obviously we talked about the sort of yen carry trade last week. So yeah, interesting to see with that.
All right, so let's go in to see what moved the prices.
Yeah, so we actually had the Aussie GDP, so came out weaker than expected. But a lot of when you actually deep dive into the actual figure, we actually saw it made a sharp sort of turnaround from last year's sluggish pace around the same sort of time. So a lot of the growth was really around the data center boom, as well as household spending. There was an uptick, especially like electricity, for example. The productivity improved 0.2 for the quarter, but the unit labor costs remain elevated at 5.4% annually. Despite the sort of miss, it was positive for the Aussie, and the Aussie throughout the whole week of last week was actually the top strongest currency out of the G10 when it comes to the increase in price. So that was pretty good to see from a local perspective. Obviously, we saw the China data as well, the Caxton or the rating dog, which is basically a view of the sort of better gauge of the smaller sort of export orientated service providers along China's east coast. And this really just looks at a lot of the sort of small companies compared to the sort of large and medium enterprises. But it was a weaker than expected private survey data, which showed a contraction, especially in the manufacturing PMIs. The Chinese service PMIs is actually a 5 months low from June. We also saw some of the positive data from Canada. So we saw Canada's unemployment data drop to 6.5, driven by a rise in part-time as well as youth employment, so age 15 to 24, which is its lowest it's been in nearly 20 months, which had a good sort of a record for the CAD last week. Bit of an increase against the US dollar, so it was good to see with better than expected unemployment data. We also
That was
saw with
hit a
the
10-week high,
yep,
didn't it, against the dollar?
yep. No, definitely it was
That's come
good
out
to
a bit
see with
later as
that.
well.
Yeah. And I guess the US economy data, a lot of the data points we saw a really poor sort of ADP non-farm payrolls, which really help increase the probability of a 25 basis point interest rate cut, which we'll talk about a little bit later in this week. But basically, the percentage is now 88.4% according to the Fed CME tool, up by 2% from the previous week. So interesting with that, and we'll obviously go into the central banks with this week. The notable events, we also saw a couple of headlines from Sam Altman, which is the OpenAI CEO, who's basically saying that they're potentially behind with the AI race against Google, especially with the sort of recent Gemini 3 release, as well as Mark Zuckerberg coming out to say that he's actually going to scrap the metaverse and really focus on the AI. So no longer the sort of VR headsets and all those sort of futuristic innovations. But we'll head to this week and just preview what's going to be really a big driver when it comes to this week is going to be first we'll be looking at the RBA. So the RBA is going to be looking to announce tomorrow around 2:30 p.m. Sydney time. So we're looking at a hold expected to probably be um, probably on hold for a little bit of time, but the likeliness of a rate cut is probably almost um, all but ruled out. So we're probably looking at maybe a hike, maybe next year, if anything, when it comes to the interest rates. But it'll be good to see with the indication. A lot of the indications are going to be really around whether there's the expen- like whether we're going to expect interest rate hike. I saw that during the week, ANZ basically removed its expectations of any sort of cuts for next year. So we've got a few of the big fours really predicting the next sort of rate to be increase, if anything. So on hold for a bit of time, and then we'll see the likeliness based on the statement presented by Governor Michelle Bullock. So we'll sit and just wait for that sort of announcement. But we're also looking at the Canada as well as um, the Swiss. So we're expecting to see that both probably be on hold. There's going to be a good sort of expectation that they're going to be at towards the bottom of the sort of easing cycle. So they could be on hold. I don't know whether there'll be any sort of indications that there's going to be sort of easing for those, but we'll see how that pans out. The biggest one is going to be really around the US. So we're going to see probably a 25 basis points cut to 3.75. This is going to be a really close decision. I think we're going to be seeing if there's, I guess, any sort of divide between the voters. We're looking at probably two members at least dissenting, according to the US Financial Times survey. I guess the results is really going to be indicated by probably and led by Fed Jerome Powell. So we'll see if there's any sort of future indications. We're probably going to see Stephen Moran expecting 50 basis points. We know his perspective, so it's almost a no brainer when it
Eh,
comes to that.
Everyone knows what he's going to do.
So
Right.
no surprises with that. We're also going to see probably others expected to be probably a 25 basis point cut, including Fed Jerome Powell, so Fed Chair Jerome Powell. We're probably going to look also the previous dissenter, um, which was basically a hold from the rate cut from last time. So Jeff Smith. So he's likely to be joined by some of the other Fed members, so Suzanne Collins, Austin Goolsbee, as well as Michelle Barr. So it'll be interesting to see, I guess, with vote count to see how close it really is. I think the decider is going to be probably, yeah, Jerome Powell's vote, but it'll be interesting to see with how that plays out. We also have got the Australian unemployment data, so we're going to see the unemployment change as well as the unemployment rate. I'm kind of thinking, leaning towards it could be actually 4.3, so it could be better than that 4.4 expectation. So hard to see with that, but it's going to be really around looking into the data and seeing with the part-time part-time employment as well as the full-time employment figures. So it'll be interesting to see how that pans out. The China CPI and PPI is going to be very interesting to see how the inflation's going over there. I think a lot of the sort of data is coming in fairly weak, so it'll be good to see a sort of positive outcome, except for yeah, especially since it drives the Aussie dollar and the UK GDP, Ollie.
Yeah, so I'll jump in with the UK GDP. So I spoke about the impact of the UK budget a couple of weeks back, just in terms of what that does for the Bank of England. Largely, it is expected that the Bank of England will be looking to cut rates in response to the recent tax hikes on the budget. That's because the tax hikes are looking to take money out of the economy while the Bank of England's looking to stimulate it. So I did see a take actually on the BBC this morning that Goldman Sachs research, or their research department, is expecting the Bank of England to cut rates in December. This is also followed by 3 more rate cuts in the first half of 2026. So I think if these forecasts do come ahead, we could see some pretty strong selling on the pound as Bank of England is looking to prop up the FTSE. That could be. Next as well, just to round off this week, we've got some unemployment and PPI data from the US. Long story short, I don't think this will actually have too much of an influence on the markets because all this data is coming out after the Fed decision. And in terms of how that shapes upcoming Fed decisions, it'll all be outdated by then. So I don't think there'll be too much of a price reaction on these data points to tail off the week. So moving into the technical corner. So let me just share my screen with everybody. So to start off, I wanted to take a look at the US dollar against the Canadian dollar, given that we do have central bank decisions from both of these regions this week. I think it could be quite topical. So as I said, just slightly earlier as well, that on Friday we saw the loonie go to a 10-week high against the USD. That's also shown by here that it's hit its lowest price since around late September, USD CAD that is. So to get an idea of where we might be sitting on the daily, I'm looking at a couple key different areas. On the one hand, I'm seeing the MACD, which is crossing over its zero line here. As well, we are seeing some divergence in the MACD line away from its signal, which is telling me there is some bearish pressure on prices. As well, we can see the most recent swing high is actually lower than its previous. So there is consecutive lower highs, but I'm looking to get a bit of an idea of if this is going to pull back slightly before we go on a little run down. I'm also seeing the MACD, which is getting very close to our oversold area, which historically will lead to a bit of a response in price to go back up a little bit before continuing on this trend. So I think for prices today, I think if we could see the prices go higher and then fight resistance at its previous resistance from September, I think we could see it then make a move lower towards its swing low from mid-September as well, around that 1.3735 mark. Similarly, as well, if we see the prices go up a little bit higher, we could see it travel up towards the psychologically significant 1.39, in which case, if we find resistance, I think it will then go on to make a lower low. But if we see it break and hold around this sort of area here, we could see it then move higher as it trades back into its moving averages. So as I'm saying, I am a seller in this market, but I do think we've got a little bit of room to move up before entering into a sell. For this as well, I think I would need to be very conscious of my risk management strategies as well. So for this one, you could be looking at previous day highs and lows, depending on the sort of range you are there. Otherwise, you could also look into the smaller time frames, such as the 4 hourly, to see where the next key support and resistance prices could look. The next market I did want to have a look into was Ethereum. So I was having a look at Ethereum on the daily. This is a market which we have spoken about a few times on here, so it's definitely worthwhile taking a look. So you can see by this descending channel starting around mid-September, it's been in a pretty strong bearish run. For Friday as well as on the weekend, we're seeing the prices are loving that 3,000 price point, the psychologically significant 3,000 price point that is. And to start the week now, we have actually started the week off slightly stronger, and it's looking to retest last week's highs. So for this one, I personally am a seller in this market, but I do think that it could, for the week ahead, we could see a bit of movement in here. So if I'm a seller in this market, I want to see the prices come down below the psychologically significant 3,000 price point. And I want to see it hold down there. Maybe it can look to retest its lows from Tuesday. And if I'm seeing a break and a hold below this sort of range, I'm looking for a sell as it travels further down into its descending channel. Similarly, though, if I'm looking for buying opportunities on here, I'd like to see a break and a hold above last week's highs first off, and then I want to see it break above the upper level of this channel. And I think if we could see a break and a hold above this, I expect that would also lead to the MACD crossing over its zero line here, which is a typical indication of bullish momentum, where we could see prices move up towards its moving averages as well as its prior support and resistance, I guess, around the 3723 level. So that brings me to the end of the technicals for the moment. So moving into the Q&A section, where Steve and I will answer some of your guys' most commonly asked questions from last week. So Steve, would you like to take it away with question one?
Yeah, so question one is, what are traders looking for in the central bank decision? So with this sort of question, a lot of the central banks, so we've got four this week, it's really a lot of it's really priced into the market. So the probability is already priced in. It's just really about the future projections. So depending on the sort of speech, so whether it's hawkish, so if it's more towards the strength in the economy, or whether it's dovish, so weakness in the economy. So it'll be interesting to see how everything plays out. A lot of the traders will kind of really have a different sort of perspective on the forward outlook. So it's really going to impact, especially generally like 30 mids beforehand, as well as post 30 mids. There's going to be that sort of volatility just to be wary of, and obviously have that sort of risk management in place, or even just not trading throughout the sort of volatile period. So always good to be focused on really that sort of risk management side of things.
Thank you, Steve. And I'll take it away for question two. So, question is there a danger in using too many technical indicators simultaneously? And obviously, I'd say personally, I think the easiest answer for this is yes. So, reason why is that when you use a technical indicator, it should be used in conjunction with other signals to form the basis for your trade argument. So, in a circumstance where you have too many indicators, it can lead to conflicting signals as well as overcomplicating your outlook for a trade. And this can lead to some decision paralysis, which can actually stop you making timely decisions and cause you to miss trades or miss levels that you might be looking at previously to that. So, I generally like to say that when trading, you want to keep it simple and focus on the price action. And also, you want to combine your technical indicators with your own assessment of price movement, say using fundamental analysis, or even having a look at any of the content like the Monday Open here, getting a bit of an idea of where you expect it to go. Okay, so that moves us into the conclusion for the videos. So a recording of this will be uploaded on YouTube once we have concluded. As well, we will be uploading a link to this in our VIP chat room as well as on Telegram. We're always looking for people to get involved with the questions or anything like that with the Monday Open. So if you do have any questions you want us to answer, please feel free to reach out to Steve or I directly, or reach out to us through any of the before mentioned channels. All right, well, thank you everybody for watching today. And Steve, I'll see you later.
Thank you, Ollie. Have a good evening, everyone. Bye.
Cheers.